Hey everybody, it's Hammer here with Vetted VA. How are you this week? Let me go ahead and bring up the slides. This will make my life a little bit easier. So we are here with your mortgage market update this week. We do this each and every week on Wednesdays. If you are here today, go ahead, let us know that you're here. Today's October 5th, 2022. Our guest this week is Cameron Kimbrough. Cameron, please take a minute, tell everybody a little bit about yourself.
What's going on, everybody? Cameron, I'm a mortgage broker in the state of Alabama. Opened my own brokerage this year. I've been with Vetted VA for about a year and a half now. Just excited to be here with Hammer and keep pumping out, helping consumers, helping veterans, helping clients.
Awesome. Well, thank you for being here. And if you guys are here live, do us a favor, give us a hashtag live. Let us know that you're here. Be a part of the conversation, ask some questions, share your thoughts. There's a lot to talk about when it comes to rates, and we know that. So all of your questions, we see your posts. We try to address a lot of those things here. If you're watching on the replay, we know that it's not always convenient for you to be here on Wednesdays. So if you're watching on the replay, do us a favor, give us a hashtag replay. Let us know that you were here. We do monitor the post. If you have questions, feel free to post them, even if it's a later date. We will answer them for you and share any thoughts that you have. So real quick, let's do a recap of what happened last week and a forecast of kind of where we think things may go. And then we'll talk about where we're at live and we'll pick Cameron's brain for a little while. So quick recap last week, rates got slightly worse. In fact, there was an article in Bloomberg this morning talking about how mortgage rates have risen for the 7th week in a row in 16 years. Now, normally, any of the media news sources, when they talk about mortgage rates, they're referencing a specific survey that's done called the Freddie Mac survey. And it is done it's usually, I think it's done on Thursdays. But so sometimes it's not always kind of accurate with where we are in real time, but this one actually is. We have definitely seen rates rise. Cameron, would you say 7 weeks? It feels like eternity, but would you say 7 weeks sounds pretty accurate?
Yeah, about the last 2 months.
Yeah, we saw our lowest rates in quite a while at the end of July, and all of August, all of September, we've seen some really strong rate increases, very unexpected by me for a couple of reasons I've talked about on some previous shows. So, but anyway, the average mortgage rates moved higher last week, continuing a long trend of rising rates. Rates are volatile through the week, moving higher and lower day to day as markets reacted to different events. Last week, our mortgage rates were really affected by some events in England, which sounds counterintuitive. Why would anybody buying a house here in the United States, why would their mortgage rate have anything to do with what's going on in England? And it's really just 2 words: global economy. We are a global economy. So what happened over in England spilled over into our bond market. And as I've shared with you guys before, when we look at these funny little candlesticks, the bonds and the movement is actually very much what controls your mortgage rates. So we saw that movement, and that kind of gave us a little bit of a hard time last week. And then it actually gave us a bit of a rebound last week. And we'll talk about that. But mortgage rates right now, the forecast on Monday was that rates started the week off well and could improve. We might finally break that losing streak. Mortgage rates started the week off with some improvement. We could finally be in a spot to see rates improve for the first time in weeks. However, as with recent weeks, we do have a lot of economic data that could actually cause rates to move higher if it points to higher inflation and larger Fed rate hikes. So it's a good week to stay in close contact with your mortgage professional, a mortgage professional like Cameron, to get, to really give you real-time data, talk to you about what's really going on the rate sheets. What's affecting rates this week? We've got economic data. It is a busy week for data. There's a little bit of data today, but most of the big movements we're going to see are going to be on Friday. Friday is going to bring us some jobs data. The labor market is a very big movement, mover for mortgage rates because of the effect it has on the Fed. So we'll talk about that in a minute. If the jobs data comes in strong, rates are not going to like that news because it's showing a resilient economy. And what we really want to see, as counterintuitive as it sounds, we want to see the economy kind of taking a bit of a bath, losing ground, losing steam, because it's the only way we're going to slow down inflation is to slow down the economy. So when we get reports that are showing that the economy is still chugging along, that's actually not good for your mortgage rates. We also had a lot of Fed speakers this week. And when the Fed members open their mouths, they tend to kind of influence markets. And so sometimes that can cause rates to move around. And then the global economy, like I talked about before, early improvements this week were actually a reaction to England's announcement to reduce some planned tax cuts. So a little bit more about what was actually going on and why we saw that movement. England put out a announcement from their finance minister that they were going to cut taxes and they were going to contribute spending to people that were having problems paying for their energy bills because they're entering into an energy crisis over there. A lot of that has to do with Ukraine and Russia and the war there. And anyway, when you introduce money into the economy, it's called fiscal stimulus, and they're stimulating the economy. Problem is, fiscal stimulus is what has fed this inflation problem that we have. And in England, especially, they have a double-digit inflation issue over there. So this idea that they're going to put more money into the market, more money into the economy, markets freaked out about this, and we saw their bonds really lose a lot of ground because inflation is bad for bonds. That hurt their entire economy, so much so that everybody was starting to panic. And the Bank of England had to step in, and that is their central bank, the equivalent to our Fed. And the central bank had to say, hey, we're going to go ahead and soak up some of this extra money. We're going to do some, what they call quantitative easing. They're going to buy up bonds. They had to basically calm everything down. And that is why we saw a little bit of improvement to end the week versus the worst rates we saw at the beginning of last week. And then this week on Monday, England came out and said, well, we put out this plan. One of these things was to cut taxes. Well, we're not going to cut all taxes. We're going to leave some of these taxes in place now. So they kind of backtracked a little bit, and markets liked that as well. So we saw some improvement, but where we're at the last few days, we've seen things improve. Cameron, have you seen rates improve, Monday, Tuesday, heading into today? What have you seen on mortgage rates? As again, this is a generality, y'all. You should always know that, you need to talk to a professional to get, rate quotes for your unique situation. But for a generality, what have you seen, Cameron?
Oh yeah, we definitely had some improvement. Beginning of this week, it's been a significant change versus what we saw last week. I mean, I know one day there was a little bit over 100 basis points movement. Was that Monday, I believe? We had a lot of movement and a lot of improvements that came through. Some lenders are a little bit more hesitant to pass on some of those improvements because they know how volatile it's been. So some of them didn't really start to show those improvements maybe later in the day on Monday and then into Tuesday. But as they kind of held and bonds performed well, it seems like we started to see some better pricing coming through.
So this morning we got a little bit of an ugliness. What were rates like this morning?
So definitely some pullback. I know overnight I saw, I get your messages, and so saw overnight, rates didn't do well, bonds didn't do well. So we had some pullback. Still better than I think where we were in our worst spot, probably some point last week or the past 2 weeks. I think we're off of the worst. Maybe we can kind of maintain a little bit of momentum, I'm hoping. But I know ultimately it seems like from what I understand through the end of the year, it's going to, probably continue to get worse before it gets better. That's why I always stress to my borrowers how important it is to stay in constant contact with your loan officer, because rates never just go a straight line direction up or down. There's always going to be movement. So hitting those waves, hitting those swings, at the crucial times, getting locked in, I believe is always important.
Absolutely. So up here for y'all, I've got a chart, and this is called the Japanese Candlestick chart. We've talked before, when you go shopping for getting a mortgage rate, basically the that's quoting you a rate is going to use two things. The first one is the bond market. What are mortgage bonds selling for in the back end? And this is the same for everybody. So you'll see rates move up and move down the same for everybody based on this data. The other one, of course, is their margin. What does it cost to run the company and to make a profit? That can vary from company to company. And that's why you want to shop around. But looking at this, let's talk specifically about this here. I'm going to draw a couple arrows on here and show you guys. When you see these red lines go down, this is bad for your mortgage rates. It pushes your rates up. When you see a trend like this, when I say a trend where we see many of these lines together, see how they all work their way down. This is where you saw mortgage rates go up. Again, if we were to flip this chart on its head, you would see mortgage rates have gone up since the beginning. If we go all the way back here to the beginning of August, that's where these mortgage bonds started a trend where they were going lower. And then, there were a couple of times it looked like, hey, maybe we'll see a reversal right here. Maybe things will improve a little bit. And then instead, what we actually got was more of that worsening where rates tended to get a little bit worse again. And we saw that, all the way going down into September. Then we saw that through September. And towards the end of September, we really got a lot of very, very powerful rate jumps. And those were right here. This was a Fed meeting that we had at the end of September on the 21st. And after that Fed meeting, which was, at one time I said, this is our only, our real shot at seeing things improve for mortgage rates. But if it doesn't go our way, we're going to see rates really jump. That's what we saw happen. So if I were to draw a line, I'm going to take this and put this here. This is where we had that Fed meeting, and I'm going to put it right at the end. So this line right here is where we had that Fed meeting. And since then, you could see how things have gotten worse. Well, we were getting a rebound. So I'm going to draw an arrow going up, and I'm going to put it right here. And this is kind of, you can see a trend line, as we call it, where each day, each one of these candlesticks is representative of a day where things have gotten a little bit improved. And that's why, as Cameron said, rates had improved a little bit through the beginning of the week. But today, I want you guys to see this red candlestick right here. This one's got to catch your attention. So you'll notice it's on the wrong side of the tracks. Instead of us continuing to be on this side of the arrow that I have, when we see a break like this has to catch our attention, because it is very likely that this is the start of what we call a negative reversal. So things are going to get worse is basically the bottom line. What we may see happen from here, and I say may because there's a lot of variables, but we may see where things are now going to go back down again, and they're going to move into a trend like this. So instead of that positive trend that we had where things were improving right here, where they were going up, 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 now they may go down. And if they go down, that means your mortgage rates are going to get worse. So even though these rates are not the rates that you want to lock in, I get that. They're rates in the sixes. And you said, hey, what happened to those rates in the threes? Cameron, what happened to the rates in the threes? Where did they go? How fast they went away. And we've talked about this before, that this was, a lot of the low rates we had post-COVID, during COVID even, were because of economic stimulus and fiscal stimulus. So we had monetary stimulus, which comes from the Fed and our central banking system, and we had fiscal stimulus, which is when the government is giving out free money. So those two things were really helpful for a little while, but now they're really hurting us. We have inflation that has pushed rates up higher, and as a consumer, you don't want to pay more than you have to. And Cameron gets that, I'm sure. I understand that for sure. But right now, there's definitely some benefits to looking at buying a home, and even with rates being higher. So, of course, you should never try to qualify for a loan that is over your head. And your mortgage lender, if you're working with a reputable mortgage lender like a vetted VA professional, they're not going to allow you to get in over your head. They're going to counsel you to stay within your means and make sure you're protected. But even if you can afford it, knowing that you don't want to, but here's why it's a good time to buy a house. So Cameron, I'll throw it out there and then you feel free to run with it. I say that it's a good time to buy because what happens is when rates move up, it lowers demand. There's less people that are out there looking to buy a home. And when demand starts to slow down, prices get back in check. And this year and the last couple of years, we have seen a market where prices have just gone crazy. People were losing out to multiple offer situations. Cash buyers were very strong, but now we're starting to see that slow down. We've seen deceleration and in some instances, even a little bit of depreciation, meaning home values are starting to come back down just a little bit, not enough to panic, enough to be aware of. So I see that. What do you see and think is about that?
Oh yeah, absolutely. We've seen that here in my local market. Definitely. Whereas before, it seems like you would have these realtors, many of them that I know personally, they're posting these homes kind of overpriced, but knowing that, hey, even overpriced, they're having people coming and looking, making offers, sometimes full price offers on those. And so that's definitely changed now. We're in a transitionary period from what was, and has been a seller's market, hardcore seller's market. We're kind of in a transitionary period, if not already transitioned into a buyer's market. We're seeing those decreases being posted. Hey, we just lowered the price on this. Definitely buyers have a lot more advantage and a lot more leverage right now to put in an offer, especially for our VA clients, for our veterans. Whereas we kind of got a lot of pushback from people the last couple of years, not quite as willing to want to accept a VA offer because of the myths that they've been taught or believed. And now we're definitely seeing them be more receptive. Of course, a large part of that is what I like to think part of what the community's tried to do in educating. I know I try to educate our local realtors in our community about the benefits of the VA program. So, but yeah, it's definitely transitioned, definitely seeing prices coming down, seeing listings, being priced a little bit more reasonably. As you said, I don't think I don't think we're really seeing like any kind of dangerous depreciation, but it's not appreciating at the rate which it was, and it's not accelerating at the rate at which it was, which is I think honestly just going to help make things more regular, get things back to a more regular situation, and then I kind of think long term, hopefully into next year we'll see rates kind of begin to get more regular. Um, and then that's really going to kind of get us back to what I guess most of us were used to, pre-COVID, good rates with good prices.
Yeah, I agree with that. And I'll say, for a rate forecast as far as where rates will go, because I know that that's the question we get a lot. Rates are very likely to remain in that range that we've seen. And when I say range, we're trying to say maybe like around 6.75 is what I would say is a range. And it may go down maybe a quarter point, maybe 6.5, or up to 7. But just to give you guys an idea, when we're looking at it, when I say a range, we know that rates, like Cameron said before, are not going to stay the same day to day. They move up, they move down a little bit. And but we're not seeing right now, we're not seeing a big jump, but we're also not seeing them go down a lot. And one of the biggest mistakes that people can make in this market is waiting to buy a home because they want to see rates drop. Do you think, Cameron, that's something that can be a mistake, or do you think that someone should do that?
Oh, that's absolutely a mistake. Especially I would say for our veteran clients that, well, I'll get into that for a minute. But I think that's definitely a mistake. We've kind of heard it. 1,000 loan officers, if you're friends with that many of them, have shared it. Marry the house and date the rate. In today's day and age, no one keeps a mortgage for 30 years anymore. It's in all likelihood like 90% of people you're going to be refinancing within 5 years, or definitely within 10 years, just depending on what happens. And so it's one of those situations, especially now that we're transitioning into buyer's market, you're able to find a home, get a good price on it. You want to get locked in on that home. But with the understanding, knowing you're not necessarily locked in on your interest rate, not for long term, and especially for veteran clients. One of the things I've always mentioned, and I'm educating all of my veteran clients on right now, is that interest rate reduction refinance loan that the VA has. So the IRRL. And so that's a huge advantage for veteran clients, because after you buy a home with your VA loan benefits, you make 6 monthly payments. So that's 7 months after you've bought. You would be eligible to do an interest rate reduction refinance loan. Very low cost, very quick, very easy. Essentially, it does exactly what's in the name. It's just about lowering your interest rate. And I've got a lot of people that are on deck. I think that 7 months from now, kind of getting into spring and summer of 2023, that it's going to be a prime time, hopefully, to do that and see some significant improvements on those interest rates at that time.
Yeah. And we've talked about this before. I want to keep it short. And Cameron, I know that you've got to go. Whenever you have to go, feel free to just say goodbye and wave. But we'll wrap up in a moment. But we've talked before that we anticipate rates to go down in 2023 as the Fed raises interest rates. The Fed funds rate specifically, they're pushing all of the rates across the market higher to slow down the economy. But once the economy slows down, they're going to have to resuscitate it, because what we're doing is, it's like an action movie. We're bringing it within an inch of death, and then we're going to have to stab it in the heart with some adrenaline and resuscitate it, wake it up. And to do that, the Fed is going to be, reducing rates again. Mortgage rates will drop, and we will see rates that are lower than where we're at today. It's very, very likely. I can't guarantee you the future. You should never buy with the idea that you need rates to drop again, which is why you need to qualify where you're at today. But it is a fantastic time to buy a home because prices are starting to come down. Rates are very, very likely to come down in 2023, as we've discussed. And you'll end up with the best of both worlds, because instead of buying a home at a much higher price point, you'll have gotten, at the lower end of that spectrum, and then rates will drop and you'll get that end too. So, all right. Well, is there anything that you'd like to add for the call today, Cameron? Anything you'd like to leave everybody with?
Just stay positive. That's the biggest thing I can say, especially for the home buyers out there in the market. It's almost, you kind of feel a little beat up if you've been in the market for the last couple of years, because it's like, well, prices kept getting higher on homes, and that was a little discouraging to some people, and their offers are getting beat out. Now finally we've got in that transitionary point, and now it's like, well, now rates are going up. But just stay positive. Like we said, there's opportunity out there to find the home that you're looking for. There's opportunity to get into it and work with a loan officer that's going to help you and educate you at trying to get you the best deal that's possible right now, but also planning for your financial future, moving forward. So just stay positive, and just keep working towards it.
Oh, push Cameron off. There you are. Just wanted to thank Will Andrews. He put a post up on Vetted VA and was talking about how, all the help he'd gotten from the Vetted VA group, and named, one of the things he talked about was the weekly rates chats that we do here. So if this is helping you, definitely let us know. Remember, you can join us each week, 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, 9 a.m. Pacific. Again, if it is something that's helping you, do us a favor, let us know in the comments. Give us a hashtag replay if you go back and watch this. We just want to make sure you guys are getting value out of it, and that it's doing what it's supposed to do for you. So we do monitor the post. If you have any questions, Lori, thank you so much for your comment as well. And that's it. Cameron, thanks for joining us. I appreciate having you here. I'm sure we'll see you again in the future. And everybody have a fantastic day. Bye-bye.
Bye.